Hey, good morning, everybody. Good to be with you here. Friday morning, a little cooler this morning in Wisconsin. We're in the mid 50s. Feels a little bit refreshing, so we'll take it. Grain market's a little bit lower this morning. Let's jump in. We've got December corn down 5.5 at 501. We've got November beans down 5.25 at 1334 and a quarter. You got the wheat market down 12 to 20 between Chicago and KC. Equities are slightly lower. We have an unemployment number out here this morning. Crude oil's higher. Bond market is lower. Something interesting here, the 10-year bond yield got back above 4% with a 405 recent high here, or 405 this morning. The highs were set back in October at 432. A lot of that's just on the back of the Fed meeting minutes being released, suggesting that more rate hikes are coming here into the end of the year. Here's your drought monitor, some improvement week over week, but I got to tell you, if you were just to glance at this quickly, it would be hard to argue that there's been much of a change. This probably continues to support the market. 7-day QPF. Definitely some rain out there, but I would call this mostly a neutral weather, non-threatening. It's not really bullish. It's certainly not really bearish. And going over to the Euro model, certainly more precipitation here. So bottom line is we're looking at some wet weather here over the next 7 days into July 14th. The amounts are going to be debatable at this point. Let's talk corn market here real quick. I kept these trend lines on here. Part of our argument on the way up was this thing got too extended, got away from any kind of trend lines. Let's reward these rallies with some sales. Well, we've got to say both sides of the story, and so here it is on the down move. This thing has gone straight down. Now, typical trading wisdom, if you will, is that the markets will take the elevator down, and I'm not going to sit here and disagree with that, but again, we have to paint both sides of the story, and I think you could argue that risk to reward at this point might favor somewhat of a bounce or certainly a melt up, potentially back into that 530 to 550 area, and we would be ready to make some more additional sales or hedge protection at that point. And the reason why is something we have to consider here is when you start to rebalance these balance sheets with the acreage number, and even with a yield reduction, and you can manipulate some of the export numbers, I think it's probably safe to say that we're looking at above a 1.5 ending carryout here for U.S. corn. And if that's the case, typically we just don't spend a lot of time above $5 when that's the number. We also have a high world ending stocks out there. So again, that's something looking a little bit further down the road, something to keep in mind. But typically, again, if you're above a 1.5 billion bushel carryout in U.S. corn, you usually aren't seeing a lot of time spent above that $5 area. If you have questions, remember too, the insurance price is at $590. We're more than happy to help answer some of those questions for you, see how your insurance plan is going to work out. Craig in our office here is our insurance agent. We will answer your questions. We're not going to sell you anything. Feel free to reach out to us. I'll have his number posted on here. Thanks again, guys, for tuning in. As always, hit the like button if you enjoy our content. Please consider subscribing. It helps us out. And we also have a free trial to our report down below. We'll send it out to you for a couple weeks. After that, it's $199 for 6 months on our intro rate. And we hope you guys have a great weekend. We will talk to you on Monday.